Hello. My name is Peter Banks. I had a lot of fun filming the last kind of conversational episode, so I thought I would do another one. What I want to talk about this time is the fact that America is on the verge of an actual national catastrophe with regards to our national debt. And it's something that people don't really seem to know or think about very often for kind of three reasons. The first is that it's weird, national debt as a whole concept is kind of strange. The second is that it involves a lot of really awkward conversations about trade-offs that we don't want to have. And third is that Republicans have cried wolf on it for a decade now, almost 2 decades probably, right? And it's always just come across as something that it's actually not a problem, but everyone keeps saying it's going to be a problem. And the problem is that we're in the time where it is a problem. So let's just get back down to the brass tacks of the United States federal government from an accounting perspective. So I'm going to put some figures up here in front of us, but the United States government spends $7 trillion a year. This is a ton of money, right? $7 trillion a year is what we spend. Now, the way we spend this is about one of those $1 trillion goes to the defense. About 1.5 goes to Social Security. Just shy of 2 goes to healthcare, so Medicare and Medicaid. And then $1 trillion goes to interest payments. And then everything else that the government does, everything else, science spending, education department, everything, is this tiny fraction of the United States expenditure. If you ask yourself, what do we spend money on? You can basically break it down into these categories. Welfare just for old people, the military, and interest payments. So $7 trillion on this side. Now, what do we bring in to cover these expenses? Well, we bring in about $5 trillion a year in revenue, which is, again, a huge amount of money. Approximately half of this money comes from income taxes, right? So the taxes that when you get a paycheck every month, you see get taken out. About another, I don't know, let's say 30 or 40% comes from payroll taxes. And this is money that, again, is taken out of your paycheck. You pay half, your employer pays half. And then the remaining taxes come in the form of, tariffs and et cetera, right? So we bring in $5 trillion, we spend $7 trillion. That leaves us with a deficit of $2 trillion a year. $2 trillion a year. Now, this adds to a debt burden of $36 trillion. I really want people to appreciate how absurd this amount of money is. $36 trillion. Now, I'm going to put the amount of money that every single person in the United States is worth collectively here. And from a corporate perspective, you could sort of think of this as assets and liabilities, right? We have this liability of $36 trillion. And then we have all these assets, right? And then in addition to that, there's things that are intangibly owned by the United States. So I think the way we need to start thinking about this is really in terms of just interest payments paid as a percent of GDP. This is the variable that matters. Amount of money you owe in debt is actually not that big of a problem. And I had mentioned earlier that there were 3 reasons, in my opinion, that people don't appreciate the scale of the debt crisis. So the first is just that debt is weird. And I'll talk about that one last. The second one is that there's complicated trade-offs, right? And so when I mention the expenditure, when you talk about the debt to people, you talk about taxes, they're always oh yeah, 100%. We need to cut government waste. We need to cut you even see with the Department of Government Efficiency. I mean, this is an amazing endeavor, but you hear the things that they're talking about. And this is a tiny fraction of debt. And it's just the fact that it's a tiny fraction of debt means that they can get away with extravagant degrees of waste and grift because $1 billion is still a fucking $1 billion. And so the fact that it's nothing in our national debt means that you can easily steal it and no one will notice. But that aside, that is not where you are going to balance this $2 trillion black hole. The where you balance this $2 trillion black hole is making difficult decisions about entitlements. Social Security, Medicare, Medicaid. These are not things that when you talk to a person, they're excited to cut. Like having an honest conversation about the deficit that doesn't involve cutting entitlement spending or raising taxes is just not an honest conversation about the deficit. And then the third reason, which is the second one that I'm talking about, is that the Obama administration era was one that Republicans complained constantly and incessantly about the debt. I mean, like, they shut Congress down. They lost their minds constantly over it. And interest rates in the Obama administration were so low that basically nothing happened, right? Like the actual, as a percent, you can see here, I'll put it on the screen. You can see here as a percent of GDP, interest payments did not start to like really creep up until after COVID and with the like 2022 chaos. Okay, so we have the picture now. These are the two reasons. The final one, people are weird about debt. So like, what is debt? Like I've sat here and I'm complaining. I'm saying the variable that's really important is interest payments as a percent of GDP, right? But like, why is that important? Like, what is debt? Well, debt is effectively a claim on future income, right? Like what happens when you take any debt is that you're promising a person some of your money in the future. So like I go and I buy a car and they give me the car today, right? And then in exchange, so for example, I have a Tesla. In exchange, I give the Tesla, let's just say, $500 a month for the next 5 years. And that's kind of like the way that this arrangement is set up, is that I get the thing now, and then in exchange, you get the amount of money in the future. But then there's risk. There's always chance that I'm not going to pay you back. And even if I was going to pay you back, like there's other things you want to do with that money, like money worth in 5 years and so we charge interest on it. Like this is just basic. You cannot avoid this. Like the countries try to ban it. Like there's this whole idea called Islamic banking that's trying to get around charging interest. It's just interest by another name. Like it's interest plus weird legalism. Interest is just what you're compensating someone for the difference in how much they value the money now versus in the future, and just the risk that something could go wrong, right? Like I have the Tesla. What if I get hit by a car and die? Like Tesla's not going to get their money back from me then, right? So the government's debt is forced to be interest. The debt for the United States government functions the same, right? Like we wanted to buy something now, and so we bought it, and in exchange, what do we have to do? We have to pay back the society, right? Like we have to like pay back like the people who bought the debt. And so who owns this debt? Well, like literally giant companies own this debt. Like huge finance firms, billionaires, people with their pension funds. Like this is an asset. You can open your Robinhood account right now and buy government debt. What does it mean to buy government debt? It means to have a claim to tax flows. That's literally what it means. It means you have a legal right to some of the tax income. So like right now, I said we pay $2.5 trillion a year in federal taxes, right? In income taxes. So that's like the number that you have to go file on TurboTax. Half of that money goes into the pockets of billionaires. Like I'm literally not exaggerating that half of that money just goes and is returned like shareholder profits. And so it's like, yes, like pensions own this. Your boomer grandparents own this. Like when you're writing a check, the problem is that we struggle to think about society as this huge production and distribution machine. And that like as soon as you accept that, like to some extent, that's what the economy is. It's just a production and distribution machine. Then when you pay money somewhere, that's a resource you're reallocating in some way. And so when you pay your income taxes to the federal government and half goes in interest payments, well, then what happens? It's like when you pay a check, half of that money going to Jeff Bezos. Because that's what happens to it. And so we have to cut the deficit like now, or we're going to be spending all of our money giving it to billionaires. Like literally we will be the legal serfs of billionaires. And so then you say, okay, we'll just won't pay it back. You blow up the entire financial system. Like we are this like delicate economic dance that like people contribute huge amounts of money and time to. And why? Because they're confident that it's not going to all shatter. Like it is based on like a collective belief that it functions. And if we just tomorrow say like, we're not going to pay it back, it all comes crumbling down. So like we will have to pay this debt back. And whether we just inflate the currency to shit, because we can just turn 36 trillion Zimbabwe dollars was like nothing. Like you can just pay this off like easily. You can just say like, well, the dollar's worth $1 trillion now. So like, okay, I'll give you back a trillionth of what your value was. But again, that's just blowing it up. Like what we need to do is we need to get this under control. So how do we do that? Well, it's actually not super complicated. This is a great graph of just expenses and income for the federal government for a time series, right? So you can see, for example, in like 2004, this is what the United States federal government brought in revenue, and this is what they sent out in expenses. And you can see that there's this like period of time in the late 1990s that spending kind of like levels off, but revenue mechanically continues to increase as the economy grows. Just we keep getting more productive, right? Like we keep building more things, and also just inflation happens. Like we tend to target like roughly a 2% inflationary rate. And so just revenue just mechanically goes up, and spending usually mechanically goes up, but it doesn't have to. And so we just need to do the same thing now, but much more aggressively. We just need to stop spending more money. Like you don't even need to cut spending. You just need to stop spending more money. Or you just need to even slow the pace of how much you're spending money. So I would literally balance the budget with just 3 reforms. Like 3 reforms would balance the budget. Reform number 1, just change the way you calculate Social Security and other entitlement payments, inflationary rate, so that they don't change at all. Like you can just do this through reconciliation. Like we determine how much they change per year, right? And like we redo these calculations. And I mean, fuck it. Like if the legislature won't act, just as the executive, change the basket of goods that you track. Like right now, I think we use CPI. Just come up with some new one. Call it like Doge measure, and it's just 0. It's just always 0 under all circumstances, and so it doesn't matter how much inflation there is. It's just 0. Social Security check is the same as it was last month and the month before, and you just do that for 5 or 6 years. Reform number 2 is literally remove the cap on payroll taxes. So like right now, when someone earns money, like they earn a couple $1,000s a year, they end up paying payroll taxes, right? So this is what I mentioned is one of the other 2 huge components for how we bring in revenue. And a payroll tax is in theory supposed to be a savings account. So you're in theory supposed to contribute to kind of like your insurance plan for when you get old, and your social, like your 401k effectively. And so to maintain this illusion, employers and employees each pay half, right? But because this is how it works, you end up making kind of like an escalating amount of money the more money you contribute to Social Security. It's this extremely strange system that like it's actually actively regressive. So if you make less money in your life, you get less Social Security. And if you make more money, you get more Social Security. And when you hit a limit, I believe it's like 100 and something thousand, but I'll put that number here. When you hit a limit of income, you stop paying more. I am not joking. It's a tax you only pay if you're poor. And the richer you get, the less you pay as a percent of your income. That's insane. So just remove that. Like everyone should pay the same. And third, just cap entitlements. Like if you're getting a Social Security check, if you're getting any of these things, it should not be proportionate to the amount of money you contributed. Like everyone should get the same. And if it is proportionate, it should be that you get more if you're poor. Like obviously. Like if the whole point of this is it's supposed to be some welfare program that we're supposed to like protect the needy old people, we should be giving more money to the poorer members and not the richer ones. Like this is like obviously easy. And if you just did literally these 3 things and then changed nothing else, we would have a balanced budget in no time. Thank you for attending.